Good morning, traders. Today is April 30th, and it is heading into an important week with trade developments and US data in focus. Let's take a quick look at the market trends and what the charts are showing. So, starting with the US dollar index, the dollar saw only a mild rebound in early Tuesday trading after heavy losses the previous day. Trade negotiation remain uncertain. While the US has signaled a partial willingness to ease tariffs, China continues to hold a stronger position, and according to analysts, with no confirmed progress from Beijing's side. And this tug of war has kept the markets cautious. All eyes are now on this week's US economic releases, particularly the quarter one GDP, PCE, and Friday's non farm payrolls, which could offer clearer signals on the Fed's next move and the real impact on the current trade tensions. And technically, the dollar index is fluctuating around 99, still under pressure. Short term moving average like the 5-day and 10-day continue to slope downward, and RSI is hovering near 37, suggesting weak momentum close to oversold territory. The MACD continues to show increasing bearish momentum, and key resistance is now near 99.84 and a psychological 100 mark, while support lies around 98.9 and the previous low 97.91. And overall, technical signals suggest a fragile recovery at best. So, moving on to WTI crude oil, the prices remain under pressure after falling over 2% to hit a 2 week low below 61. The drop extends the steep 15% monthly decline in April, which is the worst since 2021, driven by the fears that Trump's escalating tariff policy could drag global growth lower. Weak US consumer confidence data and growing expectations of increased OPEC supply have added to bearish sentiment. Additional flows from Kazakhstan and potential returns of the Iranian crude further cloud the supply outlook. And from a technical perspective, oil remains in a clear downtrend. Price has broken below key support at 62, and the 5-day and 10-day moving average have formed a bearish death cross, while the RSI sits around 40, indicating continued weakness without being oversold. The MACD remains firmly bearish, and resistance level include the 20-day moving average near 62.78, while downside levels to watch include the 60 and potentially 58.5. Turning to spot gold, gold prices slipped below 33.20 an ounce as easing trade concerns reduced the demand for safe haven assets. US Treasury officials claimed that major trading partners, including China, were showing more openness to negotiation. However, Beijing has downplayed these claims, keeping tensions simmering. Market participants are waiting for this week's key US data to assess the inflation trends and potential policy moves from the Fed. And technically, gold is testing support in the 32.90 to 32.65 zone, corresponding to a 38.2% Fibonacci retracement of the recent rally. And a clear break below could open to the path to 50% level at around 32.28. And on the upside, resistance is seen at 33.58 and 33.68, followed by the 3400 and 3500 psychological levels. For now, momentum looks neutral to slightly bearish, with a potential turning point approaching depending on this week's data. Finally, Australian dollar. The Aussie dollar pulled back slightly on Tuesday after a strong session the day before. Comments from Chinese officials pushed back on negotiation rumors, warning that concessions would only embolden the US. And traders are now focused on Australia's inflation report on Wednesday, which could shift expectations for the RBA's policy decision in May. The market is currently leaning towards another 25 basis point cut. And technically, Australian dollar remains in an uptrend, supported by the 9-day moving average at 0.6396. RSI is about 55, showing that continued strength, and key resistance is at 0.6439 and 0.6462, with a potential upside target near 0.6515. Support lies around 0.6365 and then 0.63 psychological level if weakness builds. To wrap up, the markets remain sensitive to developments in US China trade talks and upcoming US macro data. And technically, most major assets are testing critical levels, and momentum is either fading or uncertain. Expect increased volatility in the lead up to Friday's job report. So that's all for today's morning analysis. Stay tuned and trade safe.